If you're ignoring Ethereum right now, you are making a massive mistake. In fact, you risk missing its most violent reversal in years because while market sentiment is hitting absolute rock bottom, a hidden, fundamental shift is happening that the crowd is completely missing. And here's the twist. While retail traders are off chasing competitors and short-term hype, the institutional giants are making a record-breaking move in the exact opposite direction. They are rotating into Ethereum on a scale we have never, ever seen before. So by the end of this explainer, you're going to understand exactly what they see. We're going to break down the 3 core catalysts driving this hidden shift: the tech, the money, and the on-chain proof, and the price targets the experts have for 2026. Let's dive in. First things first, we have to look at the problem, because to really understand the opportunity, you have to understand the pain. And right now, the charts are just screaming weakness, and it's pushing the average investor away. This single number right here, 0.032, tells a story of maximum fear. This is the ETH/BTC ratio, basically Ethereum's price compared to Bitcoin, and it has crashed down to a support level we last saw in the darkest days of the 2019 bear market. Now, to the crowd, this looks like a reason to sell, but to smart money, this is the exact level where historic, face-ripping reversals are born. And let's be real, some of this pain is justified. Competitors like Solana are winning over retail users. They're fast, they've got low fees, and yeah, they're even flipping Ethereum's daily trading volume at times. This is the loud, distracting story that has everyone looking the wrong way. But while that surface-level drama gets all the headlines, the real story, the one that truly matters, is happening in the institutional world. This is the hidden shift, and it's a story being told not in tweets, but in billions of dollars. This chart is the smoking gun. For the first time in history, institutional futures volume for Ethereum on the CME, which is the playground for the world's biggest hedge funds, has flipped Bitcoin. Let me just say that again because it's a huge deal. This isn't retail FOMO. This is the smartest money in the world making a massive coordinated move. The key takeaway here is that this isn't just new money coming into the market. It signals that these huge investors are actively rotating capital out of other assets and into Ethereum. They are positioning themselves right now for what they believe will be a massive catch-up trade. So the billion-dollar question is, what catalysts are they seeing that everyone else is ignoring? Well, it all starts with the technology. The first catalyst is a fundamental upgrade to Ethereum's engine. It's called the Fusaka upgrade, and it just went live, quietly solving one of the network's biggest problems. At the core of this whole thing is a technology called PeerDAS, and it's being called the holy grail of scaling for a very good reason. To put it simply, it's a revolutionary new way to verify data. Instead of forcing network validators to download these enormous files, they can now confirm everything with tiny, random samples. It's a genuine breakthrough.
The impact of this is immediate and absolutely staggering. An 8 times gain in efficiency right out of the box. The data load on the network gets slashed by nearly 88%, making the entire system radically more powerful.
And what does that mean for you and me, the average user? It means transaction fees on layer 2s, the platforms where most of the activity actually happens, are projected to plummet by up to 95%. In one single move, the whole Ethereum is too expensive argument is basically dead. But they didn't just make it cheaper, they made it smarter. The developers built in this economic safeguard, an EIP that creates a minimum price floor for data. This is brilliant because it prevents fees from dropping all the way to zero, which ensures ETH remains a deflationary value-capturing asset. It's a really sharp piece of economic engineering. Okay, so the tech is upgraded. It's more powerful than ever. But catalyst number 2? Well, this one's all about the money. This is the financial innovation that's poised to unlock trillions in new capital for the ecosystem. We've all heard about ETFs, right? They're totally mainstream now. But what turns a simple, standard ETF into a financial killer app that institutions absolutely cannot ignore? Well, the answer comes down to one word: yield. Think about it. A standard ETH ETF just gives you exposure to the price. That's it. But a staked ETH ETF, that is a completely different beast. You get the price exposure plus a native built-in yield of 3 to 4% from staking rewards. This transforms Ethereum from just a speculative asset into what's essentially a digital bond, a productive asset that pays you rent just for holding it. And this isn't a question of if, it's a question of when. The biggest names in finance, we're talking BlackRock, Fidelity, Grayscale, they are all lining up to offer this digital bond to their clients. This isn't some niche crypto product. This is the mainstreaming of Ethereum as a global yield-bearing asset.
So we have a massive tech upgrade and a financial killer app on the horizon. Now let's look at the on-chain proof that the smart money is already acting on this very thesis. The on-chain data confirms everything. During the recent price dip, the whale wallets didn't sell. They accumulated over $1.3 billion worth of ETH. And look where they're buying, right at that 0.032 historical support level we talked about. They see this not as the point of maximum fear, but as the point of maximum opportunity. And this is the prize they're playing for. Don't just take my word for it. These are the price targets from institutions like Standard Chartered and VanEck. Based on these fundamental drivers, they see a clear path for Ethereum to reach between $7,500 and $22,000 in the coming cycle. If you want to stay ahead of major market shifts like this one and get more insider analysis, make sure you like, share, and subscribe to Crypto Global News. And definitely hit that bell icon to get regular updates so you never miss our next deep dive. So, to bring it all together, the evidence really points to one conclusion. Ethereum is a sleeping giant. The fundamentals aren't just improving, they're compounding. The tech, the finance, and the on-chain data are all aligning at the exact same time to create an incredibly powerful setup. And this really leaves us with one final thought. The catalysts are aligning. The institutional money is already making its move. The only question left is, are you positioned for what comes next?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.